Just allow us 2-3 minutes more. We'll start the press conference. So I would very good afternoon, everyone. Myself, Archana Patsati, I'm from Concept PR. I'm very pleased to invite everyone here for Federal Bank's Q1 FY25 Q results. Before we move to the presentation where I hand over the conference to Mr. Shyam Srinivasan, I would like to introduce our senior management team who are present here. Mr. Shyam Srinivasan, MD CU, Ms. Shani Warrior, Executive Director, Ms. Harsh Dugar, Executive Director, and Mr. Venkatraman Venkateshan, our CFO. Before we move to our press conference, I would request everyone to keep yourself muted. If you have any questions, please do add it on the chat box or raise your hands towards the end of the conference for Q&A session. Shyam sir, over to you.
Thank you. Good afternoon, everybody. You may have had a chance to see our results, which were declared about an hour or so ago. Clearly, it has been a very strong operational performance quarter. On many counts, our all-time firsts, whether it's net profits, net interest income, many other metrics. We've done well, and that's been on the back of many good quarters. That should sustain, and importantly, lays the platform for a great financial year. We've started the year with a resoundingly strong performance in Q1. You may have seen both the numbers we released today and the flash provisional business growth numbers, which we declared earlier in the month. By all counts, our performance has been clearly market leading, both on credit growth and on deposit growth. At a time when many are struggling to make that happen, Federal has delivered clearly market first numbers and resulting in both business growth and importantly, our market share gain is perceptible. And this quarter, like I pointed out, from the NII point of view, we had an all-time high of almost 2,293 crores. Net profit, again, an all-time high at 1,010 crores. So we've exited Q1 well, which sets the stage for a strong financial year. There are areas of opportunities which we've been pursuing. And I think those initiatives taken over the last few years are all beginning to bear fruit. What is interesting and important to note is that our business is not sort of anchored around just one product or one segment. We've tried for long periods of time to keep the diversification going. And that's visible in all our numbers. Almost all our businesses have been sequentially growing 4 to 5%. What is noteworthy in Q1, amongst many other developments, is the fact that the expansion we've done, the various launches we've done, all have helped our deposit growth come back even more strongly. For a couple of quarters, we had some challenges around muted growth on the NR side. Happy that that's been reversed. So I think on balance, I'd characterize Q1 as a strong operational performance quarter, and we believe that that should sustain as we go into FY25. So with those sort of opening remarks, I think it's best that I answer questions and pick up points that any of you may want to discuss.
Thank you, sir. So we will start with the Q&A. We will start with Pragati Oberoi from NDTV Profit. Pragati, over to you.
Her questions that she normally asks are already answered.
No, sir. Hi, sir. Oh, you remember my questions, the ones I asked? Oh.
Yes, Pragati, you are famous for your questions and your observations, so don't worry.
Thank you so much, sir. I'll take that as a compliment this time, I should say.
Yes, go ahead. Yes, shoot.
Okay. So my first question is definitely about the margins.
Pardon me, it's not coming through clearly.
Sorry, sir, can you hear me now?
Better, yes.
Yeah. So my first question this time is not about the management, it's about the margins. There have been margin contraction again in this quarter. So, and it has been going down consistently. So why is that happening? When can we see some improvement in that? What is the guidance like? That's my first question. I'll come to my next one after this.
Let me sort of dispel some of these observations and obsession for margin as the only driver of franchise quality and franchise growth. I think we must look at growth in absolute income, because you could have very strong margin expansion followed by rather tardy or shoddy credit growth, credit quality. I think we've said, and I'll underline it many times over, Pragati and others, that it is always a balance between quality of credit and the quality of income.
Right.
We are very confident, and we've said that many quarters, and we've demonstrated. I think clearly, credit costs at 30 basis points that we've delivered indicates that it's probably absolutely top-notch in the industry. So we could have 3.9% NIM and 100 basis points credit growth, credit cost. It doesn't count for much. So sustainability of profitability is crucial. I'm not disregarding the importance of margin, but I think it's important to amplify what is relevant from a point of view of absolute interest income growth. We grew credit roughly about 20%. We grew our interest income roughly 19%. So it's in tandem.
Okay.
So that's the observation I want to make. And we are guided for in the range of 315 to 320, 325 plus minus. We are in that space. I don't believe that we should get too alarmed by anything other than that. Will it go up? Yes, as the business mix goes up and the deposit cost environment changes in the country over a period of time, will be advantage. But I want to make it very clear that Federal Bank's objective is not NIM maximization at the cost of other parameters working well. So it has to be seen in the context of NII absolute growth. It has to be seen in the context of the credit quality and how is the deposit franchise moving. That's why I pointed out for us importantly and very healthily, Q1 deposit comeback was strong. And more importantly, one of the levers which we've traditionally been strong on, which was slowing up, has come back quite strongly. So I think there is a bunch of parameters working, and I'd like to believe that's why I upfronted by saying it's an operationally strong quarter.
Got it, sir. So just one clarifier there, and then I'll come to my next question. My clarification is that you said the margins will go up. So possibly from Q2, Q3, and is the margin guidance that you've given for FY25?
No. I think, please let's be clear. I did not say it. Okay. I said over a period of time, it will. Okay. Right now, we are guiding for somewhere in the where we have begun the year, around this number plus minus, we should be. I see it's very dynamic to the deposit cost environment that we are operating in the country, right? So I don't believe, but that said, we're doing well.
Got it, sir. So my second question and my final one would be that now as you prepare for your exit, what is the one work in progress at Federal Bank according to you?
No. Any large organization should always remain work in progress, right? If we ever are satisfied with everything that's happening, then that organization is a bad space. We've done well, but we have lots to do, and we will keep doing. It's a going concern. So we are doing well, and we should sort of dial that up. And I'm sure The super team that we have will take it to another place.
Okay, but do you expect the transition to be smooth? Because I'm sure these next 2 or 3 months will be all about the handover process as well.
Yeah, we believe we make everything to make it smooth. I mean, there's no reason to be unsmooth. Uh, See, only person changing in the system is me, right? I'm only a summary of my people. The team are there and they'll take it to another level.
Got it, sir. Thank you so much and all the very best. Thank you.
Thank you so much, Pragati. I will now request Siddhi.
I would request those not speaking to go on mute, otherwise it's disturbing, please. Go ahead, please. I see Siddhi and Kabir's hand up.
Yes, next I would request Siddhi to ask her questions.
Hi, sir. Thanks for the question. My first question is on your credit costs. They're slightly up in this quarter. Wanted to understand from a guidance perspective if you could help with some numbers on where do you think this credit cost trajectory will go going forward. That's my first question. I'll come back later.
Yeah, sure. I think, Siddhi, you've been tracking, so you know quite well. Credit costs are not, one quarter versus the other. It's how does a full year play out. We've always guided somewhere in the 30 basis points, 35 basis points should be our credit costs. Happy that this quarter is in that number. Q1 last year was slightly higher, so this year Q1 is way better than last year first quarter. But last year fourth quarter was like in a sort of a too good to be true, right? Because we had a massive recovery and therefore credit costs were near zero. So I think if we pencil in somewhere in the 30 basis points credit cost, we're doing well. And that's, like I said to the earlier question, we are probably amongst the best in the industry on credit costs.
Okay. So my second question pertains to your microfinance book. I understand that the book size is small, which is why we saw like 107% growth YOY on the microfinance space. Wanted to understand if you could throw some color on how the book is faring. We are seeing other lenders in the industry saying that there is some caution there. Some agri slippages for some lenders have also gone up. Want to understand how is the book faring, especially with the election related stress nowadays. Plus, we also have certain states that are seeing stress in the south side.
As of now, nothing that will sort of call out for anything that we have to suggest that there's a problem. But these are businesses that do have external sensitivities that come into play. If you recall, 4 to 6 quarters back, we had made one commitment and we think we are living to that. We want to diversify that across geographies and across ticket sizes and focus on new customers coming in as opposed to doing more per customer. And that model we haven't deviated from. Yes, the book is growing, but like you pointed out, on a relatively smaller base. But it's something that we will keep a very tight vigil and watch. As of now, it's trending to expectations.
Okay, so I'll come back.
Sure.
Thank you, Siddhi. I would request Kabir from Informist to come forward and raise his question.
Hi, good afternoon, sir. Kabir here from Informist Media.
Yeah, Kabir.
So, just wanted to ask your outlook on deposit and advance rates going forward, as like the rate cycle is now expected to somewhat be stable. So, wanted to know if you're planning on raising deposit rates any further.
See, I think these things are quite dynamic. They are not, it's not like on July 1st, I decide this quarter I will raise or I will not raise. It's in keeping with the market practices, liquidity in the system, how our credit expansion is happening. As you saw in Q1 and many other quarters, we tried to make sure two parameters, three actually. Our credit deposit ratio is somewhere in the early 80s.
Right.
Closer to 81. Two, we want to be very, very sacrosanct on our LCR criteria and make sure that the credit expansion, which is linked to CD ratio, is in keeping with our deposit capability and not the other way around, right? Fund before you lend is our principle. So with that as the parameters, we will constantly calibrate. Our ALCO meets as often as required.
Right.
And take stock of how our deposit momentum is, what's the credit pipeline. And with that view, we grew 5% sequentially on both credit and deposits. I
Yes.
do believe that momentum should sustain in the quarters ahead. And to meet that, we will ensure that our pricing is appropriate. And like I said, we are not mindlessly pursuing only one vector. I could be criticized for it, but balance is a criteria of Federal Bank, which we will not deviate from.
Right, sir.
Not like this, or we want balance. And that's helped the bank for many years, and hopefully for many more years.
Right. So just one other question. I saw in the presentation that reserves have gone up by around 400 odd crores because of the new investment norms. So what will be the effect of that on the treasury income?
Treasury income had, I think, blended benefit of about Venkat, is that right?
Yeah, it's about net is about 50 odd crores. There were gains and there were some other losses as well. Net about 50 odd crores.
50 odd crores of gains.
Yeah.
All right. Thank you, sir. And just last question on branch expansion. In the last quarter, you opened 14 new branches, sir. Any outlook on further expansion for the rest of the year?
Yeah, FY25, if I recall right, in FY24, we added 140 branches full year. We are looking at somewhere about 100 branches in FY25. But it will be first half will be about 35, 40, and second the balance. But we will keep close watch on how things are shaping up. But it's worked well. You saw our deposit pickup is influenced by our meaningful expansion in the last year and a half of about 200 plus branches.
Right. So congratulations on a great last quarter at Federal Bank, sir. Thank you.
Thank you. Thank you.
Thank you, Kabir. I would now like to invite Ben Sir from New Indian Express to raise his question. Ben Sir?
Sorry, who are you asking? It's not clear, Archana.
Archana is calling on Ben from Indian Express. Ben from...
Hi, Shyam. Can you hear me?
Yes, go ahead.
Can you hear me?
Yes, Ben. I can hear you. Please go ahead.
Congratulations for a good set of numbers.
You.
Could you just tell me what are the stress areas? Okay, you improved your asset quality, but where are the stress coming in? Is it credit cards, unsecured loans, or agri or MSME?
As of now, there's no pronounced stress of any nature differently from how it usually behaves. You would have retail slippage is blended is about roughly 200 to 225 crores every quarter for last many quarters, while the is growing quite significantly. It's not any pronounced call out. Thankfully, credit card base is holding well. But then being conservative in the credit expansion on credit cards because we largely do to pre-approved or pre-qualified databases. We don't less of new to bank origination on credit card. On microfinance, I did explain it's it's in tandem with our credit expansion. So as of now, I'm not flagging any material increase. But that said, it's not an area we can take our eyes off.
Has the unsecured loan growth been contained after November last, or you're growing at industry level, or you're going above? What is the book? What is the personal loan book? And
the reason you will see a higher rate of growth in ours is because our denominator is small. It's still, as a percentage of our overall assets, it's sub 4%. Shalini, am I right? Shalini?
Yes, Shyam. Yeah. Yes. As Shyam mentioned, because we start with a smaller base, the year-on-year growth, Q-on-Q growths may look really high on all of these, whether it is credit cards, personal loans, microfinance, they're all small. But overall, in the overall contribution, as Shyam mentioned, it's around 4.5%, 5%. That's the range it is. We do have opportunities in all these segments, and we will continue to explore those opportunities.
And Shalini, how good is the asset quality there in PL and in credit cards?
So we've been quite disciplined and principled about who we lend to in all these, in credit cards, personal loans, and microfinance, and therefore the credit quality has held quite well. So a large chunk of our base is anyway coming from our existing customers, Ben. We still do a lot of cross-sell of credit cards and personal loans, for example, to our existing customers. These are people we've known for a long time, and therefore collectability doesn't become a challenge. We do have some new to bank also coming in, but with the scoring models that we have in place, we don't find credit quality to be a material concern. Obviously, keep a very close eye on it, and we keep calibrating our scorecard to ensure that we get the right through the door population.
My last question is: you are one of the biggest players among the banks in gold loans. How is that book, and how big is that book?
Gold is about 27,000 crores, and gold is thankfully, by the nature of the business, is a good secured product. If it issues, it will always be around some, sort of fraud or something like that. So gold is a good business to be in as long as you have good operational controls.
Okay. Thank you, Shyam. Thank you, Shalini.
Thank you, sir. I would like to invite Jigneet from Money Control to raise his question.
Thanks, Archana. Hi, sir. Firstly, I've got two questions. First, just wanted to understand, is there any update on your co-branded credit card business as such after RBI curbs? What's happening in that area? If you could just give some highlights.
No, I think we are working with RBI. We need to make many more submissions. There's a lot of dialogue and debate going on. We'll make our submissions. We'll try to phase it out. Some may get approvals earlier, some may be delayed. But we are working with RBI. As of now, we don't have anything incremental to update other than the fact that a constant engagement process is on.
Right. Any particular timeline you're expecting to submit the requirements that have been asked from your end to the regulator?
Yeah, that's what I said. It's not like one definitive date you put in a submission and it'll come, because there is a certain level of discovery of issues happening on how we have to meet the outsourcing guidelines for lending, outsourcing guidelines for IT. How do we handle the co-brand credit card policy? So there's a lot of engagement underway. I want it to happen in this quarter, at least a part of it. But that said, I don't believe we are the only players in this. The regulators have to take a holistic view. With the course of Q2 and early part of Q3, we should get some closure.
Okay, noted. My second question is on your deposit front. I just wanted to get some highlights and some understanding on what's happening specifically on your CASA deposits through your fintech partnerships. As such, how's the business there? Are you seeing some stress there as well? Because deposit mobilization on the larger side has been an issue. But from your fintech business, what's happening there? Some highlights.
I think there is no, on the deposit side, it is not a stress issue, right? It is more a volume issue. Technically, if you're getting more deposits, never a stress. On fintech, like I always said, right, it's a good distribution vehicle to get further reach. I think we share it in our numbers. Our whole fintech related deposits are a little more 1,000 odd crores against our 2,65,000 crore deposit franchise. So it's it's not like a massive number. And that said, it's growing. The rate of incremental growth of our fintech accounts, we have moderated, because after being in the business for 2+ years, we understand the kind of filters we should put so that it's not like a large number swathe of customers come in and then they don't build balances and it results in other practices. I think we've moderated our through the door quite nicely. So what is coming in is certainly much higher quality and building better balances. And these things will play through over the sequential quarters.
Okay, thank you.
Thank you, Janet. I would like to invite Piyush from Financial Express to raise his question.
Hi, good afternoon, Shyam sir. Sir, couple of queries. Firstly, on your No, basically, sir, on your slippage rate, it has retail slippage rate has actually increased about 13 bips in line. Last quarter it was lower, but Q3 it was higher, and last year same period it was even higher at 1.92%. So, retail slippages, sir, where are these? What are these products which are showing higher delinquencies? Also, what is the SMA 1, SMA 2 in credit card portfolio? Has it risen to by a degree in comparison to the last quarter or last year?
No, none of them have seen any, like I think Shalini also mentioned, nothing is dramatically off the charts. The slippage, I think you answered part of the question, right? I mean, retail slippages is a band. So like I said when earlier I opened, for our overall slippages, retail has been in the 200 to 250 kind of range. And this quarter was about 240 or so on a larger denominator. So it's not out of range or out of expectation. The retail book is largely home loan, LAP, auto, credit card, personal loans, and none of them are showing any dramatic adverse behavior. But
Sure.
in these things, one has to be, super thoughtful and careful. These are very, first, good news is effort elastic. Second is we do a large number of them to pre-approved basis. Third is collection intensity has a very great role to play in this, and we are trying to work through all of them.
Okay. So yesterday in budget, the finance minister announced that the Mudra loan quantum would be hiked 10 lakh to 20 lakh. And they also said that for MSMEs who are in the SMA category, they will be providing a credit guarantee fund for lending against those entities. While this will likely boost the growth in the sector, do you think in terms of credit quality, differentiating between entities like MSMEs and corporates, for one set of entities you have the same norms, for one you don't. So my broader question is, does it vitiate the culture, the credit culture in a long term?
I think that would be a very extreme interpretation of what may happen. I think these things if I remember when GECL was launched at the beginning of COVID, there was a lot of debate that it may cause issues. Happy to report it hasn't, either for us or for the industry. So I think as long as the benefit is offered in the most appropriate manner to the deserving or the most needy, you could believe that this should not become an issue. And if it's sort of used to mask some problem, it can result in an issue. So I think it's the weapon is not the problem. The use of the weapon is the problem. So let's only time will tell on that, Chief.
So one last question, if I could slip in. The RBI has approved appointment of a new MD. There were reports that the bank, along with an external candidate, also named two other internal candidates as well. We have seen this in the case of Kotak as well, where they went for an external candidate. Here also, that's the case. Does the RBI, you feel, have a penchant for external candidates over internal candidates? You have been a veteran. I wanted your view on this. Thanks.
This is absolutely hypothetical question. Right? I wish I had the mind of RBI to answer this question. We just have to respect the process. I think it was quite well done. And we've moved on. We now have a name in hand. We have a business to run. And I don't believe I would have any kind of answer to offer on that. It could be in some other instance, they could argue that internal candidate got, and another instance an external got. I don't think I can make any judgment on that. I mean, I can share with you 100 views. That's irrelevant.
Thanks, sir.
So can I just take a follow-up on Piyush's question? It's regarding this only.
Go ahead, please.
So because an external candidate was selected for the role now, could you just throw some? There was some investor concerns about senior management attrition. Could you just throw some clarity on that front? If by any chance that could be impacted because of the RBI's decision?
I think these are all in the realm of speculation. We have a solid team. I believe they are as excited about the opportunity as the incoming leader. I did mention earlier, any leader is a summary of his team. We have a great team. So I'm assuming that the new leader with this capability will be able to carry this team to greater heights. Beyond that, how am I to guess or anybody to guess? It's situational, but I think we have a team that's like rock solid.
Okay, sir. Thanks.
Thank you.
We have Mr. Kumundas who would like to raise his question.
Hello, am I audible, sir?
Yes.
Okay, so my question is that in supplement to the budget, because we had a budget yesterday. So the finance minister announced the increase in the education loan limit to 10 lakh. So what is your view? So how it will help your loan portfolio grow, particularly in education loan segment?
Because our education loan book is quite small. Even if it doubled, it will not dramatically alter our loan size of the bank, not change the financial dynamics.
Yeah.
But education loan program is done. It has a different objective. The government does it to ensure that more people are able to equip themselves better, study better, and are not hindered by the availability of finances. So I think perspective on why government offers it and how it is being executed on the ground and who benefits from it are always one. Whether the bank's credit books will grow and what will happen is actually a byproduct. So I don't think business momentum of the bank suffered because we did not have this program. It will just help us reach out to more people and offer loans to the needy who may get the benefit of a higher loan or getting the loan easier so that they can accomplish their educational objectives. So from a business point of view, I don't have much to add on that unless Harsh or Shalini, if you want to add anything. I can't think of anything, Kumud.
Nothing to add, Sham. We have a small portfolio, as you said, and we definitely look at education loans primarily for our own customers and their kids. So nothing material. It will not change anything material for us, Sham, and to the team.
Yeah. Okay. Who goes next?
Thank you, Kumud sir. Next is JP Ranjan. So, OT.
Hello, sir. Hello, sir. Sir, yesterday finance minister has announced that government will come out with some financial sector vision and strategy, and it will be a 5-year agenda for financial sector. What is your view on that, and do you have any recommendations about that, sir? Thank you.
No, I think these are sort of blue skying, but if you allow me to think, I would think given the needs of the country and taking the 2047 as the sort of direction and increasing GDP, increasing per capita, if the country is going to invest big on infrastructure, which it is and it will, then the need to fund that growth is an important dimension. And funding infrastructure growth needs long-term finances. Traditionally, the financial sector or the banking system produces your money, my money. So it's a shorter term, shorter tenor money. So the big thing that the financial system will look at, I'm guessing, is how to raise long-term money and therefore developing those markets, developing the bond market, creating secondary market for bonds. So that would be one dimension of stuff. Second would be a lot of reforms around what already has happened is around the IBC process. How does the resolutions happen? Third, the heart of any government's objective is inclusive growth. Therefore, how do you, like, for example, the finance minister announced in the Northeast, there'll be 100 India Post Bank branches opened so that the number of people there will benefit by easy access to banking. So you would see if these three objectives, right? How do you grow the infra market and therefore the banking system? How do you have the credit resolution programs getting better? And thirdly, how do you ensure that the infra businesses, the inclusive business expansion happens? So I think my own blue skying is around these three dimensions. There's a lot of thought that will happen. And then there can be attendant issues of how do you merge banks? How do you do you need few big or do you need many small? Those debates will happen. Yeah.
JP sir?
think
Yeah, that's okay.
Amandeep
Thank you.
or
Great. So, Shamsa, we have 3 more questions that have been added in the chat. I'll start with the first one. It is from Ashish from PTI. So, the first question is on the other side, income side, where is the recovery from the return of assets coming from? Any big account there? That's the first question, sir.
the beauty of our book is that we don't have any big ticket write-offs. So the recovery from big ticket write-off is, I wish it comes only from very past write-off. Otherwise, it's very granular, a lot of hard work. Our teams have to go out and get that, but that's the part of the franchises. One, unfortunately, I will sound boring, but one of the things that hallmark of our bank is that we want to be boring so that it's predictable and it's balanced. So I know I don't sound very sexy when I say that, but that's what it should be. So we don't have any ticket recoveries. I'd love it if something comes. Those are far and few.
Great. So we have the second question on the NR deposit. What was the growth compared to quarter ago and year ago periods?
Shalini, you want to pick that up?
Sure. The year-on-year growth has been in the region of about 9%, Q-on-Q in the region of about 1.5 to 2%. This is all inclusive. It takes into account some of the growth we've had on the NR savings account, which has started showing quite good growth, as well as some of the changes that have happened on the NRE term side. And the FCNR is also included in that. FCNR is a conscious decision by the bank because we sometimes don't take up FCNR deposits unless we have lending opportunities. So the blended is that. I think the broader point we would like to emphasize is the fact that after a couple of years where, yes, the NR deposit growth was muted, this quarter we've actually seen good growth coming out of on the back of many initiatives that the bank has done. New products that have been launched, like a specific product for the NRE ladies, NRE Eve, expansion in the coverage that we have in particular in the GCC markets, some systems changes that we've brought about, which enables ease of account opening and makes it easier for customers to open. So on the back of all that, we've seen some good progress, both quarter on quarter, year on year. Clearly, looking forward to the coming quarters when we have some more plans on the anvil, this growth will improve further. Thanks.
Great. Thank you, ma'am. We have the next question from Roshan from Mathrubhumi. His question states, what about the status of co-branded credit card bank?
Archana and Roshan, this was addressed when Shyam had addressed the question earlier. So I think, Roshan, unless you have a follow-up on that, we've addressed that.
There's no mention on that. Then we'll move on to the next person. We have Athira from Business Standard. She would like to raise a question. Athira?
Hello, sir. Good afternoon, sir. Am I audible?
Yes, you are.
Okay. Sir, I was just looking at the credit card spendings that has taken place in the quarter. So in the quarter, we are seeing quite a dip in credit card spending. And even according to RBI's data that has come, credit card issuances for the industry has also halved. And so has, even for Federal Bank, there is a drop. So could you give some light on what is happening with the credit card spending and credit card issuances as to why we are seeing a fall?
Shalini, you want to take it?
So I'll split it into two parts. First, in terms of credit card issuances for Federal Bank per se, as you know, we've paused onboarding of co-branded credit cards since March, and therefore the cards that have been added on during the quarter have been our organic cards alone, and that's why on a quarter-on-quarter basis we've seen some decline in the card issuances. When it comes to spends, Federal Bank and the industry, typically the first quarter tends to be lower. The first quarter is a quarter in the financial year where there are virtually no festivals at all. It's a very quiet period from that standpoint. Vacations happen, and therefore, some of the other spends that you see, which is doesn't happen. So first quarter is typically for the industry as a whole, and for us has been, muted. The pickup starts happening from second quarter onwards. Amazon Prime sale, for example, is a big real estate where a lot of spends happen, and then there is Independence Day, etc. Second and third quarters will be fairly high. Fourth quarter again tends to be a little more muted, and that's how the industry as a whole is, and we are. What is to be noted is, and it's there in our investor pack, if you see, we've been doing quite well overall from a credit card spend perspective, gaining market share. We are also in ninth, if I'm not mistaken, in the spends in the hierarchy. For a business that is relatively new for us, a couple of years old, we are happy with the progress we are making. So that's the summary of what we would say on credit cards, Adira.
Okay, so, ma'am, so just one more question. For the credit card issuances, also for the industry has halved from the previous quarter, quarter on quarter. Is there any particular reason for that, ma'am?
Typically would be linked to the first quarter being quieter, Adira. That's what typically happens first quarter. Most players kind of get into a crescendo till the end of the financial year, and then we tend to see a little bit of a slowdown. I'm sure it will pick up in the coming quarters.
Okay, ma'am. Thank you so much, ma'am.
Thank you, Atira. We have the next question from Ram Kumar. He's from Hindu Business Line. His question says, first question, what are your credit and deposit growth targets for FY25?
We don't sort of have a unique target. We've been growing roughly in the 18-20% per annum. We'd like to grow that, but we don't want to be locked into it. If the environment changes and we need to be a little more thoughtful, we will. But that's broadly the direction.
The second question says, will 15% capital adequacy ratio be good enough for supporting credit growth in FY25 and beyond?
We see our current capital adequacy good for supporting our growth at these rates for the next 18-24 months.
Sure. Ramkumar, sir, if you have any follow-up questions, do reach out to us. The next question is from Atmadeep from Economic Times. His question starts with a message for the entire federal bank. So I'll read it out as it is. Congratulations for taking Federal Bank to newer heights. But is there anything which you wanted to implement but couldn't? That is the first question, first part. Which is the new management would need to focus on? Thank you, and we would like to extend our good wishes as step down.
In all these journeys, there's always lots to do, and it's never ending. I think we've done well on a few counts. We are today clearly the sixth largest private sector bank on the deposit side, and a whisker away from being the sixth largest on the credit side. I do believe in a couple of quarters we'll get there. But that's only about size. It's about the prominence and importance and the admiration the bank is earning. We set ourselves a goal of being the most admired bank. And I think in the years ahead, the teams will just go gangbusters on getting us to that point where we are truly the most admired bank. So there's no, these things are long journeys. So there's always something that we have to do. But I do believe the teams will be quite obsessed about building the most admired bank.
Thank you, sir. Atmadeep, if you have any follow-up questions, do reach out to us. The next question is from Kumud. He has another follow-up question. What is your view on the recent RBI circular on the fraud risk management?
See, I may sound boring, but I don't have views on what the regulator wants us to do. I just do it. There's not much to have a view. If that's what their considered wisdom is based on what they have analyzed across the industry, to believe that we can sit and second guess it, it'd be not a great idea. Just if that's what is to be done, we should do it and just be executing it well.
Great, sir. So he has another follow-up question. RBI governor has raised concern towards household saving going towards mutual fund, making a dent in FDs. What is your view?
Here again, like I said, it's a statement of fact, right? The governor doesn't make statements without observation that is backing it. It is a fact. People are using monies, in their judgment more judiciously. But it's a game where banks and bankers have to figure out how to serve better, price better, and get the customer to consider us and gain share. These are not. I think the structural story of how people engage with money is changing right under our nose. All of us have options, and we think with our wallet and mind and feet and use that which is most attractive to us. So bankers have to find ways to be more meaningful and convince customers to place that money with us. And remember, the economy is growing at 6.5% to 7% and hopefully higher, which means money supply is increasing. So we're going to get a share of that money supply into the banking system. Will all of it go into other instruments? No, but some of it will go, I think, yes. So I do believe the war for deposits as we knew it in the years that have gone by will certainly be there. It doesn't mean deposits will evaporate, but there's going to be higher intensity and higher competition. So distribution, product quality, service, asking customer for it, pricing, all have to play a part. We have no escape.
So I think if I can add to that, absolutely, I think Governor would have made the statement with full observations and knowledge. Two things I'd like to add. One, there is a market definitely out there even now for deposits, and it's evident from the fact that we've been gaining market share. If you see the trend on market share for deposits quarter on quarter, we've been gaining market share. Comes from a combination, no silver bullet, product, pricing, distribution, digital, all of it has to come together. That's the first. The second is, in instruments like the kinds we're talking about, whether it's SIP, whether it's mutual funds, whether it's the share of wallet, if it retains with the bank, is where we're working towards. So we have, for example, a 3-in-1 account that can combine a savings account with a demat account and a broking account. So yes, if a customer chooses to do more mutual funds, the savings account becomes the go-to from a SIP perspective, tends to keep there for higher balances and those. So this is a market trend. You and I will also be kind of, working with that market. Except that, I think the opportunities are still very high, and we are looking at how do we gain market share. And last quarter has shown that we are able to do that.
Thank you, sir. Thank you, ma'am. We have Pragati Oberoi from NETV. She has another follow-up question. Pragati, over to you.
Thanks, Archana. Shyam sir, one quick last question. Yeah. So I wanted to understand this thing from you. Are there any plans in place? Will you be continuing with federal in any capacity or on the board? Because as far as I know, and I'm not too certain about it, I could be wrong, so please correct me here. I think there are some RBI guidelines also in this regard. So can you please help me understand if there's anything in place or if there are any rules allowing you to stay on the board or having that window or not having that window? Thank you very much.
Technically, governance requires the outgoing MD not to be directly involved in the board or is functioning in any manner. And I don't think me or my board will consider that. If there are opportunities for me to be associated with the group companies of the bank, there will be, and I will consider that. But as of now, the bank's board, I don't have any.
Sorry, sir. Could you repeat that bit again? The line got a little cut.
In the bank's board, directly or indirectly, I have no role. I should not have any role, and I do not have any role.
But the group companies bid, if that opportunity opens up, you may consider it.
Yes, I think we certain. That's the board prerogative, but I will be happy.
Got it, sir. All right. Thank you very much, and all the very best. It was really nice interacting with all of you.
Thank you.
Thank you. So we have a last question from Ram Kumar from Hindu Business Line. His question states, in your long tenure as Chief of Federal Bank, did inorganic growth opportunities come your way?
Sorry, is it typed or you're reading it? I can't see it on the screen, sir.
No, I'm reading it, sir. The question starts saying, in your long tenure as Chief of Federal Bank, did inorganic growth opportunities come your way?
There are a few that came across. We did consider a few of them, but like always, what was attractive, affordable, what was affordable was unattractive. So we didn't pursue. There was one transaction on the microfinance side we worked quite hard on, but ultimately, or not really pricing, timing wise, somebody else had a faster resolution, so they got the deal. So we did discuss, we did talk, but we didn't estimate anything because what we wanted was not what we could afford, or what we could afford was not what he wanted.
Great. Thank you, sir. We don't have any hand raise or messages. We would like to close the press conference, sir.
Thank you all. Thank you very much.
Thank you. Bye.
Thanks, everybody. See you.
Thank you.
Bye.
Thank you. Bye.
Thank you.
Bye.